The broad macro is stablecoin is the tool that Bessant and the U.S. monetary architecture is going to use to redollarize the world and sink trillions of dollars of T-bills.
Thank you for doing this, sir. I really appreciate it. This is the second time I'm with Arthur Hayes, and let's get started.
Yeah.
So I want to start with your macro thesis. In broad strokes, could you outline that? And before you speak on it, I would just like to preface, having listened to you talk about it before, that it seems to revolve around a lot around like Trump and Bessant and what they're going to be doing for the next couple years. Is that roughly?
Yeah, so I mean, obviously I'm very focused on liquidity, fiat liquidity, and what are different governments and politicians going to do. I know I speak a lot about Trump and Bessant, but the whole world is reacting to what they are doing. So understanding what their political priorities are, then you can work backwards and understand what are the other major countries, and I've focused on Japan, China, European Union mostly. What are they going to do in response to what Trump and Bessant are doing, and how do they make that fit within their own political and monetary framework around what their domestic population is asking for?
Right. And let me see if I get this correct. It'll be great that you can correct me on my interpretation of what you're saying. Is that basically Trump and Bessant are setting up to print a lot of money starting next year, going into the midterm elections, and then kind of continuing to 2028 for political reasons, basically. Is that right? And then the rest of the world would then respond with probably more with liquidity as well.
Yeah, so at the end of the day, and I don't think it really matters if it was some Democrat in there.
Right. Yeah, you've said that. Yeah, right.
But at the end of the day, right, you have an empire that is built on credit, the American empire, and they need to create more credit to do the things that make sense to them, geopolitically, right? And what's the big thing now? It's the U.S. and China are going through this protracted divorce. The U.S. does not have the manufacturing base to make any of the stuff that matters.
Yeah.
Weapons, really. So, the U.S. can't fight the people that it wants to fight for as long as they need to be fought, in their opinion, without Chinese goods. And obviously the Chinese, for their own reasons, don't really want to be allowing the U.S. to just conquer the world using their material. Right. And so that's the big overarching theme. And how do you get a manufacturer to build a plant in a country that's more expensive, less dynamic, i.e. America? You pump them full of money and you say, okay, well, if I give you free credit, if I give you grants, if I take an equity stake in your company, whatever the different ways of doing it, then will you build the rare earths? Will you build the magnets? Will you build the electric vehicles? Will you, mine this, that, and the other thing? Okay, and the company, yeah, sure. If you're going to give me free money or close to free money, I'll do all the things that you want me to do. And then, the American manufacturing base can replicate what's happening in China, and then sort of American foreign policy can do whatever they want to do without having to worry about, is China going to continue to supply me the weapons that I need to do this stuff? Right.
So, it sounds like you're kind of in the camp that agrees that fiscal dominance is kind of ramping up, and you'll see, I guess, governments, including the U.S., start to take a more active role in where capital is allocated within the economy. Yeah. I would just say it sounds to me, but to me, I feel like China's been doing this for a long time. And America's finally catching up to this. Like, oh wait, this has been.
Well, I mean, I think there's no such thing as a capitalist or communist or any ist country, right? Yeah. It's all an amalgamation of the things. I mean, if you look at America in the World War II, 1950s and 60s, and you'd say, is that capitalist? It's probably economic fascism. And then they're just returning to what they were doing previously because this is a wartime. The war is war with China. And so, okay, well, company not building what I want you to build. Okay, I'm going to take a stake in you, 10% stake. Right. Oh, what are they talking about? They want the foreigners to take their, foreign currency earnings and then buy the things Trump wants them to buy.
Exactly.
Right? Economic nationalism. It's all the same thing. It's been done before. They call it something different.
So I have one question about this. When I hear you talk about, for example, Trump and Bessant, it's been just from the outside looking in, that Bessant is, he's obviously very successful and knows his stuff. Do you think that he's doing this stuff because he truly believes in it, or is it because it's what Trump wants? In other words, is he doing this for like political reasons? It's like money printing and whatnot, or is he doing it because he thinks this is the best thing for like America, or?
I mean, I guess obviously he's a team player, right? Okay. His boss is Donald Trump,
yeah,
and their goal is beat China economically, decouple, whatever you want to call it, right? And so then it comes down to Bessant to sort of actuate on those plans. And I'm sure if he reversed the roles and went back to his hedge fund days, and he said, "Hey, Bessant, do you want to buy a 30-year bond that Bessant 2025 is selling?" He'd be like, "No fucking way would I buy that bond." Right? But Bessant 2025 is a member of the Team Red Republicans, and therefore his boss says, "I need this money to build these factories." And okay, cool, I'm going to go and do that, and I'll try to sell this story on media of why this is the right thing to do.
Yeah.
Even though if you told me I have to buy this thing that I'm selling, I probably wouldn't buy it.
Right. Gotcha. I mean, that makes a lot of sense. I guess what I want to know is if he's more of a yes man, or if he.
Don't take the job if you're not willing to be the yes man to the situation and the goal. Obviously, there's a way of getting to the goal, right? And there's not a uniformity in terms of opinion on how to get to this goal, even within the Trump cabinet, right?
Yeah.
But that being said, the goal was the goal, and so if you have to continue the policies of your predecessor, Janet Yellen, of issuing more bills and bonds, because no one wants to buy a 30-year bond in the size you need to sell them, then you do that because, again, your goal is what your boss told you to do, and so you took the role. You know that don't be the U.S. Treasury Secretary if you're not willing to follow orders.
Right, exactly. Yeah. All right, so you have said that you are now not a 4-year cycle guy, basically, right? You don't believe in the crypto 4-year cycle anymore?
I don't believe in putting a number on it. Okay. It could be a 4-year, it could be not, I don't know.
Has your view on that kind of evolved or changed over the years, or have you always believed that it's kind of just been vacillating?
I mean, I'm not. Obviously, when I was running BitMEX, I wasn't as much involved in sort of the speculation.
Yeah.
I never really was into this. I understand why there's a 4-year CapEx cycle in mining and the halving and all that sort of stuff, but I never really was focused on it. Mm-hmm. Obviously, as I've transitioned more into the CIO role at Maelstrom, I'm only focused on liquidity. If liquidity matches up with the 4-year cycle in Bitcoin, great, then we have a 4-year cycle. If it doesn't, then it doesn't.
Right.
I don't want to say, oh, it must be a 4-year cycle, therefore I must go short on this date. If the fundamentals say, no, we're going to double from here.
Yeah. So my follow-up question to that is, so for example, a lot of people say, oh, the 4-year cycle is gone because who's buying Bitcoin and crypto has changed, right? It's kind of the marginal buyer or institutions and maybe TradFi funds through DATs and stuff like that.
Right.
Do you think that has modified how long the cycle is, or?
I mean, I think the 4-year cycle is more potent when the inflation rate in Bitcoin is higher, right? So obviously, the earlier we go back in sort of the block size rewards, the higher the annual inflation is of the currency, and therefore the more impact of what change in miners' behavior based on the block reward happens. Okay. So I would say the 4-year cycle, if that's your cycle, would make more sense the further back in time you go. But today, what's annual inflation? I don't know, 1%, 2%, whatever. It's a very small number.
Yeah.
So what the miners do or don't do with, was it 6.25 Bitcoin per block is less of importance today versus what is the Treasury Secretary or Finance Ministry or Central Bank of XYZ country, what are they doing with the fiat in which you price crypto? That's more important than the miners.
Gotcha. I've never thought of it like that. I'll have to mull that over after this interview. All right, so we're here at WebEx in Tokyo, and tomorrow morning you're going to be giving a talk on stablecoins.
Correct.
I don't want you to go through the whole thing because there's going to be a video of that, and you can see that. but just like in very rough strokes, could you outline kind of what you're overall going to talk about, and then I want to ask a couple questions.
Yeah. So the broad macro is stablecoin is the tool that Bessant and the U.S. monetary architecture is going to use to redollarize the world and sink trillions of dollars of T-bills.
Yeah.
And then the follow-on for that is, well, how do we make money on that? Is if you give billions of people a dollar bank account who didn't have one before in the form of some sort of stablecoin that's on-chain, well, now they're going to use DeFi. Mm-hmm. And so I have 4 particular projects that I'm going to highlight, which I believe are going to be beneficiaries of this trend in terms of stablecoin adoption, and therefore people have the thing that can use the platform.
Yeah. And just in my mind right now, that seems like it's a related, or partly the kind of the U.S. push for this is related to what you were outlining earlier, this kind of fight between America and China, right? Because it's basically how America is going to fund debts going forward, right?
Correct.
Through these stable coins. And this is one of the tools to do that. For the winners of this, you've outlined DeFi as being one of the big winners, right? Because stable coins will be on chain, and then they'll be used in DeFi. You also outlined a loser being Circle from this, right? Because you think there'll be a lot of challengers, for example, of this. Are there any other winners and losers?
Well, I mean, it depends on what price you bought Circle at. So if you got allocated shares for free at Circle, you're laughing, right? It's great.
Right.
But if you're going in and buying Circle at this insane, these insane multiples, I think that, I'll lay out why. I think Athena will become eclipse Circle in terms of second largest stablecoin.
Yeah.
And then I think Tether is going to increase the dominance that they have in the stack. And obviously there's going to be lots of competition from TradFi banks in the US to get into the stablecoin game as well. So I think Circle is probably the worst position if you had to buy $1 worth of their equity today versus anything else you could buy.
Gotcha. Any other like category winners and losers in this like major stablecoin inflow? Because you said, what did you say? Something like 10 trillion, 11 trillion?
That's my number.
Yeah. I mean, it's a nice number. It's a big number.
Yeah.
And I was just trying to think of other categories. Like, so for example, what about like World Liberty Financial?
I have no idea what they do, to be honest.
I mean, neither do I. I'm just, but how are they going to win and lose? What about projects like Aave?
Again, they'll definitely do well, I think. So again, if we have more millions and billions of more people who have the piece of collateral that is used in DeFi, some US dollar peg stablecoin, then the best in class projects are going to do very, very well because there's just that much more TAM for them to go after.
Right. Okay, so still kind of talking about stablecoins. We're in Asia. You live in Asia. And you said, I thought this was great. I've never heard this before, but I think it's awesome. You said that the finance game in Asia is basically taking local currencies and converting it to dollars and then to buy things with dollars. Could you expand on that a little bit? Like how, and then like in the framework of like China is obviously trying, I guess, to get people to not do that, right? Or other like other Asian
let's
countries.
take a look. If you think about North Asia, right? Apart from Japan, right, which is sort of a pseudo-U.S. colony that has imported their monetary system, you have South Korea, a very good exporter, control currency. Taiwan dollar, very good exporter, control currency. China, very good exporter, control currency. Malaysia, control currency. Thailand, semi-control currency. Indonesia rupiah, semi-control currency, right? So every single major population center, global exporter is either a closed currency system or very, very controlled. And what do you see around the region? It's okay, I'm a XYZ TradFi, bank, and I have this wealth management division, and I have all these wealthy, politically connected elites who own all these businesses who don't want to get their money inflated away, because that's generally the policy of all these countries. Okay, we're going to give you a substandard rate of interest, you being the average saver, work your butt off, have really high productivity, and you see none of those gains, they go to the corporates. And so who owns those corporates? The political and financial elite. What do we do as bankers? Hey, we got this insurance product, we got this structure, and somehow you're able to turn your Korean won into this dollar, and then, or a Hong Kong dollar, and then guess what? We've got these auto-callable equities you can buy. We got all these things you can buy in dollars because we know you don't want the won or the Taiwan dollar or the ringgit, right?
Right.
And that's the game.
But so with that comment, you also said that every couple of years people go to jail over this. Right?
As in, the local regulators, XYZ little analyst, you were, there's this arcane rule that you weren't following.
Okay.
Jail. Not the CEO who gave you the cover to do it.
It's like a sacrificial.
Yeah.
Okay, I see. Interesting. So are like all these Asian governments, central banks, worried about this stable US dollar denominated stablecoin?
If they're not, they should be. And there's nothing to do about it. Basically, if you think about it, if I All around Asia, except for China, everyone uses Western social media. Especially, we're talking about the mass people, right? They use Instagram, they use Facebook, WhatsApp, X, these types of platforms. And so if Elon Musk and Zuck are deputized by Bessant and Trump to go and provide dollars to the world, okay, cool, we're going to give you a virtual crypto wallet, and a Tether or some sort of stable coin can now be transferred between anybody who has a WhatsApp account. And all of a sudden, you've just given dollar banking to essentially all the masses around Asia. And that's what they want. They don't want their local currency. They want to be just like the rich person. They don't want dollars. They don't want their local currency. They want dollars. And so now that they have dollars, then the central bank loses the control of the currency. And there's nothing they can do about it. Because if they complain too much, then Trump says tariff because you're not allowing American businesses to operate freely. And Bessant says sanction to XYZ rich person or politician if you really complain too much. Well, we know where your money is, so don't bitch too hard.
That's crazy. On a related note, so I'm in the news, and the U.S. has been the absolute focus of crypto, and the numbers, at least on the news side, are just it's like night and day. Any U.S. news versus any news of anywhere else in the world, right? It just doesn't even do numbers. I was wondering, like on the investing side or like kind of on the business side, are you seeing like crypto investing in Asia or crypto business in Asia kind of slow down a little bit while the focus seems to be on America, or is it they're just kind of doing their own thing over here?
I mean, obviously the big thing now is the digital asset treasury companies. The most successful ones are in the United States, maybe MetaPlanet here in Tokyo. And so that's sucking up a lot of attention. Oh, we're doing, I'm launching a DAT, or I'm participating in some sort of capital raising for the DAT. So that's sort of what's going on in the ecosystem. Then obviously you have a lot of westernized VC funds who have a lot of money. They need to deploy. There's not really that much stuff to buy, so the valuations are creeping higher. We're not really doing much venture capital investing these days. It's too expensive. We think that people are overpaying for things, and so we'll wait a few years till the bear market, and we'll be redeploying again. But again, most of the people who trade crypto actively are in Asia. And so obviously the exchanges are doing very well. The Hyperliquids, the Binances of the world, the Sexes, the Dexes, their clients are over here.
Okay, so I mean, nothing really, doesn't seem like anything has changed that much.
It's just that the U.S. monetary policy juices the market, so everyone's focusing on what's going on over there.
I mean, like last year when I was going around, I remember at Token 2049 last year and a couple of other conferences, everyone was like, will the SEC please make some clear regulation? And then a year later you just see this explosion. Okay, so speaking of DATs, again, I like your framework for this. I hadn't thought of it like this, but you basically look at it as a game of getting into like an index fund, right? To get into those passive flows, right? You want to be, if you buy DATs, basically you want to be you want to buy one of the DATs that is going to make it into those passive, into indexes that get passive flows, right? Which is awesome. I mean, I think that's great. So my question for you though is, you kind of outlined how to do this, and I'm an idiot, especially when it comes to like trading and stuff like that. And I was thinking like, man, I think I should just buy spot because I don't know if this is like a retail game to do that. What do you think about that? And well, I think should retail be like trying to figure out, oh, this is the DAT that's going to make it into the index?
Well, if you want to play in these highly liquid, these stories like, Tom Lee talking about Bitmine, obviously I'm an advisor for a DAT, UPXI US in the US, right? If you're a retail person and you're paying $2 for $1, why? Because you should understand why you're doing this, because you expect in the near future that these management teams are going to be able, through capital raising and financial engineering, to create a stock that's big enough and trades enough so that a Vanguard, a BlackRock, a State Street, one of these passive or semi-active money managers can include this in the index, in the investable index. And then once that happens, it doesn't matter about the fundamentals of the company. They have to buy it. That's the game. And so if you're able to understand, okay, well, I think these are the funds that could buy my stock. What are the requirements? When are the rebalances? What dates do these indices tell you, okay, this stock has made the cut or has not made the cut? If you're a true investor and a true trader and you really want to understand how you're going to make money, understand that. And I understand, yeah, if that's a little bit too hard, then don't trade these things.
Yeah, I mean I mean, I guess that's my point. Like people like me. So I heard you say that, and I was like, oh, that's really smart.
Yeah.
I never thought of that, which means that again, not that I'm smarter than retail particularly, but I'm thinking like if I didn't think of this until I heard you say it, then these people who are buying the DATs now, they're going, oh, I'm going to anyway. So I mean, it just feels like. I guess I agree with like Jordy Alexander that for most retail, it's taking dumb money and giving it to smart money in these DATs in a lot of cases, I guess.
Well, again, it depends. If you hit the jackpot and you get in the passive index, then yeah, you're laughing.
Yeah, exactly. Okay. So another thing that I've heard you talk about is kind of I would say one of the other biggest narratives, DATs, and then kind of this revenue narrative where it's important for projects now to be making money.
Yes.
Imagine that. Like, what a sure sign that the industry is maturing, right? We have to make money now.
Yeah.
Not only make money though, but you have to return the money to token holders.
Correct.
Which hasn't been done that much. I think Hyperliquid would be the poster child for this.
They've done the best.
Yeah. So my first question is this just this new narrative, or is this going to become the new norm? Is this going to be something that like a couple of years from now, everything will be, not everything, but it'll be very important in most people's minds that we're doing this, that a project is doing this, returning revenue, or is it just more of like a fleeting narrative?
No, I think we're 3 cycles into DeFi, post smart contracts being a thing from like 2017. And we have millions of wallets. They spend billions of dollars in fees every year. We have some very successful projects. Some like Hyperliquid give pretty much all the money back to the token holders.
Yeah.
Some like Uniswap keep it all for themselves, right?
Yeah.
And you can look at the token performance and see what the community is finally saying. Okay, great, you've done well. I'm supporting your project by using it. You're making money. Where's my cut? Right. This is not let's put it in the treasury and never have a government
Yeah, exactly.
and never have access to it.
Put it in the DAO.
Yeah. And then go through a party at the conference. Right?
Yeah, exactly. Yeah,
I think we've done that
exactly.
for a lot of cycles, and now people are like, okay, well, we've seen projects that are handing it back to the token holders, and that is going to be expectation. So yes, you do well, but where's mine? And so I think this is here to stay.
Yeah. I mean, so I completely agree with you. And I guess one thing that's surprising to me now is I don't understand why a lot of projects that I like haven't kind of maneuvered over to this way of thinking. I feel like you should have seen Hyperliquid do this, and you would have been like, oh, we have to get this on our roadmap immediately. But it feels like the change to this has been slow.
Well, a lot of the times the problem is a lot of these projects are funded by Western VC firms,
right, of course,
who have their own issues around sometimes doing this, and so the founders are in a bit of a bind where people like myself are suggesting doing these things, and they go and talk to the VCs, and no, you can't do that, for whatever reason, and then they go in and tell me, oh no, we can't do it because XYZ VC firm doesn't like it. I'm like, well, good luck with your token that I want nothing to do with you, because the community is not going to support that. We've done that trade too many times, and I think we've seen in this last cycle the VC high FTV low flow tokens have gotten absolutely slaughtered, where things like Hyperliquid, best performing token of the last cycle.
Yeah. All right, so I mean, one thing that this really makes me, I mean, I agree, but to me the question then turns to things like L1s, like Ethereum, for example. It makes no revenue. And it doesn't really seem like it can make revenue. Like why? I don't understand how value would accrue to Ethereum, the token itself.
Well, it depends on if it's deflationary or not, right? That's the whole thing. If there's more burned every block than created, that's your deflation.
Yeah. But I mean, the way that it's set up now, though, like
invalidation, right?
Yeah, the blobs and everything. There's no all of that.
You can stake your Ethereum and earn 3.5 or whatever % you earn in ETH terms.
Yeah.
Right.
Yeah. I still don't think. I think you can make a case though that it doesn't really generate a lot of revenue, and
But for who though? Because validators are definitely making money.
Okay. Yeah. I mean, taxing the rest of everybody else, but fine, right? They're making money, but should it be valued at like 300 to 400 billion, or if it like were to 2 to 5x? Like you you said that you think before this cycle is over, it could go between 10 and 20,000. Is that just a trade, or do you think that would be like a reasonably fair valuation of that?
I think fair valuation is kind of hard to, you know, people, Raul has what, Metcalfe's law, and these are supposed to be people have laws. And then you can look at what's the validation earnings and sort of back out sort of a cash flow model, like what would I value, what's the Visa network valued at on in terms of number of nodes or how much money, you know, the network creates for the owners, that kind of thing. So I think it's all over the place on how to fairly value one of these things.
Yeah. So you would think though that ETH going to this price, what would be the reasons why it would go there? Just because of the stablecoin narrative?
The stablecoin narrative. There's the DAT that are just buying ETH. If stablecoin narrative is correct and we have more DeFi users and, you know, we get to a deflationary aspect, then there's that cash flow perspective. The number of tokens are not being created more so than what is being burnt.
Yeah.
There's that narrative too. So, and then people just forward the forecast that, oh, it's just going to keep going forever, and therefore I should pay some ridiculous multiple for those cash flows.
Right. I gotcha. And you have said, much to the bemusement of my co-host Graham Stone over there, who sold all his ETH about a month ago. He was very disappointed to hear your price prediction, by the way. But anyway, so you think that ETH is going to outperform Solana? They'll both do well.
Yes.
You think why is that the case? Just because of the stablecoin kind of thing?
There's that, basically? And then I think the Solana narrative from $7 to $280 was, you know, people getting over the FTX issue, and then meme coins, right? And so, you know, are we going to repeat the amount of interest relative to everything else in meme coins? I don't know. We look at the statistics on Pump Fund, 99.999% of people lost money. And so if everyone's just losing money, is it going to continue at the same pace as before when you have this other narrative where, you know, people are making money net? Either they're, you know, staking in, earning yield or whatever, right? So I think, what is the next narrative for Solana other than meme coins? I don't know what that is, and maybe they'll come up with one and then we can reevaluate whether that price prediction. But I think at this level, if I had $1 of new capital, I go ETH over Sol.
Well, I can't wait to talk to my friend on podcasts about this. It's going to be great. All right, so last question. Right, the cycle is going to end at some point in the future.
Yeah.
I'm not going to, whatever. But and you kind of talked about waiting for the next bear market to kind of start reinvesting. How do you think the bear market plays out? Is it we're going to have like a 2021 style euphoric blow off top? And then everyone's going to capitulate because DAT starts selling, and everyone's kind of depressed and thinks crypto is never going to be a thing. Is that what you think? And then you start to look at quality projects?
So, I mean, my mental model, and this is very speculative because we're years away, is I think 2028 timeframe is going to be the top of this particular cycle because it aligns with the sort of political cycle of the U.S. And I think odds-on favorite is that Team Blue Democrat beats Team Red Republican in 2028, only because it's pretty much impossible for any politician to keep all their campaign promises, and therefore the population that supports them become apathetic and don't show up at the polls. And then the other side wins, right? That's just how it happens. And so I think that Team Blue Democrat has to prove that they're not like Trump. And so while Trump is the same policies than anyone else, they might get a little bit more hostile to some of the monetary mechanisms that Trump is using, maybe stablecoins, maybe other piece of banking legislation, and sort of this like muddling about, and sort of then after another team takes over, causes questions. Oh, are they going to continue printing money at the same pace? I mean, obviously, yes, they are, but sitting there in the moment,
I see what you're saying.
After all this, massive gains,
crazy stuff that we're going to see for the next.
I think that's sort of the, where people start taking money off the table in a big way, and we see, a big flush out and a proper bear market.
This sounds almost like though this is not crypto driven. This is like a kind of a market-wide, multi-asset kind of bear market.
Correct.
Right. Do you see there being kind of significant stress in like banking or traditional finance?
Of course, there'll be something that blows up,
like
but
that,
we
yeah.
know the response, they print money, right? So again, the fiat system it must continue to print money unless it has growth. And so unless you're going to tell me, and even if you have growth, what's growth these days? It's AI is going to make this euphoria that takes everyone's jobs, which is great, and I hope that happens. But then what happens with your car payment and your mortgage payment when you don't have a job?
Yeah.
And we haven't created the system that says, okay, well, we've created all this wealth, let's share it. That's not very human. To say we created all this wealth for everyone, and now everybody gets to take a part, even though they didn't put in the capital in the beginning. That's just not how we've operated globally in any country from this date onwards. And maybe we'll get there after this AI post-scarcity world.
Maybe.
But there's going to be a big, adjustment factor.
And
a lot of people aren't going to like that. It's like, well, I put billions of dollars in a billion this AI. Why are you giving everyone, a $50,000 UBI income who didn't do shit, right? That's not very, I can see that happening. But without that, then everyone who's got a job, who keeps up on all these interest payments globally around the world, no longer has a job. And therefore the entire financial system collapses unless we change the way we think about who should be winning and who should be losing, or we just print all the money and take away all the debt, right?
Yeah. I mean, you remind me a little bit of Michael Howell and his we're in a refinancing system now, right? Like you have to always be refinancing the debt, right, and pushing it forward. Do bonds do well then?
No. I think they're terrible investments.
When this thing implodes, like a couple of years from now, when we see the bear market start, bonds do poorly too.
Maybe not. It depends on what your time horizon is and all those sorts of things.
Okay. All right. Well, thank you very much, sir. You've been great. You've been very kind. I appreciate it. All right, we're done.